what's up guys? Victor here with Individual Investor. This video is super important, especially if you are a new investor, because I'm going to be talking about the difference between fundamental and technical analysis. I remember when I started learning about investing that I went on Google and YouTube and I searched for things like investing in stocks or stock trading, and I just got bombarded with ads, notification, information about some software or application for stock trading and making money easily. Or I remember also seeing videos of people analyzing charts and graphs and explaining some stock picking criteria that didn't make any sense. So my hope with this video is actually show you the two different approaches that you can take to selecting stocks so that you decide the type of investor that you want to become. When analyzing stocks, you have two options: fundamental analysis and technical analysis. Fundamental analysis is primarily known as a theoretical approach to stock analysis. On the other hand, technical analysis is known more as a practical approach to stock analysis. For fundamental analysis, you are primarily relying on research. This is research that you have to do about the company and about the business. And here I would like to quote one of Peter Lynch's quotes, where he says, "Stocks are not lottery tickets. They are real pieces of ownership of a business. So if the underlying business does well, then the stock will do well over time." So I think that's a brilliant explanation and summary of fundamental analysis. You have to do research about the company and about the business. Technical analysis actually relies on instantaneous data about the stock for a period of time. You're not caring about the past performance of the company or the industry or what's going to happen with the company 1 year from now. You only care about instantaneous data, and that's what you're going to use to make your stock selection. So what type of data are you looking at when you analyze a stock or a company? For fundamental analysis, you have quantitative and qualitative data. For quantitative data, you would consider things like the balance sheet and basically all the financial statements, right? Balance sheet, income statement, cash flow statements, right? You want to look at all those financial statements because you need to understand the past performance of the business. You want to understand as well the financial health of the business, and also look at identify potential for growth in the future. You also have to factor in the qualitative side of the business, so the leadership and the quality of their management, right? You want to make sure that the company is being led by people that have a clear vision, they know what they're doing. And you want to understand also the industry that the company operates in, and you want to learn about the competition as well, and what are the barriers of entry. Can a competitor easily show up 1 year from now and take business from the company you're looking at, or it's actually the company protected by a moat that prevents competitors from easily tapping into their market share? After you factor those quantitative and qualitative aspects, then that's the fundamental of your research. Okay. In terms of technical analysis, the data that you're looking at is obviously only price and volume. You don't care about past performance, who the CEO is, what the industry is. None of that matters when you're looking at technical analysis. You're only looking at things like price of the stock and volume. If they see that a stock is trending up, they are analyzing whether it's a good time to buy now and then sell tomorrow, or hold it for a few hours or a couple days. And then based on the trends that they can identify, based on the stock movement, they make their decisions. Okay, so they use trends, they use momentum to select stocks. On the other hand, fundamental analysis after you've done your research, the reason you're doing that research is because you want to arrive at the fundamental value of the company, or what is called the intrinsic value of the business. So after you have an understanding of what the business is worth based on the numbers and analysis, then you see whether the stock reflects the price of the business or not. So a value investor, for instance, is looking for high quality businesses that have an undervalued stock price. Okay, so basically what is called bargains. So that you buy a stock that is of a good business that is undervalued, because you hope that since the business is good and will continue to perform well in the future, then the stock price will appreciate over time. So by implicit definition, when you look at someone who does fundamental analysis, by definition they are a longer or long-term investor, and somebody who uses technical analysis is considered more of a trader or short-term investor, because they're not holding those stocks or those securities for long periods of time. Now, that doesn't mean that if you are an investor and you use fundamental analysis that you cannot use technical analysis. In fact, a lot of investors use a bit of both. So you can use your fundamental analysis to find high quality businesses, but then you can use elements of technical analysis to decide when it is best to actually buy the stock. All right, I hope that's a good summary for you guys, and now you understand a lot better the difference between fundamental and technical analysis. If you have any comments, questions, or feedback, please leave it in the comments section below. Thanks for joining. Don't forget to like the video and subscribe to my channel, and I'm looking forward to seeing you next time. Thanks again.